got a bit of a challenge with my video, so please excuse me for not showing it. Now, someone asked me recently, and they said, if we were to give you a chart that you don't trade from scratch, what would you look at just at the absolutely key levels, not looking at the actual patterns that you're unfolding? So I thought of pulling one of the charts up here, but then I realized, well, maybe I might be biased. So if anyone in the next 10 seconds wants to put up a chart, just type it in the box, and hopefully I can find it, and then we can use that. Otherwise, I'll just point my cursor somewhere and draw something. If you got any chart that you want us to look at, just put it in the chat box. Anybody? All right, there is no one volunteering, so I'm just gonna, oh my goodness, I'm just gonna pull, can see chart. Give me a chart name, give me a market that you trade. I wanna put up a market that someone trades brand new, then we can look at it. So any market that you trade. Gold is one of the charts that I trade, so I'm gonna leave that. NASDAQ. Where is NASDAQ? NAS 100. Okay, let's use that. Just pull that in. So the question was, just very quickly, what would you look at if you started to look at any chart from scratch? So because I've pulled it into gold, so that's not going to help, is it? Hold on a second. I pull it into my gold chart, so all of those lines at the bottom are just confusing issues. All right, so there's fresh chart. So it just depends. I go on candlesticks, short period separators. I don't want the grid because that just bothers me. For ease and speed, you can just put black on white, then full candle, make it lime, a candle, just make it red. Okay, then, so the first thing I always do is just go to the monthly, and there are things you can do quickly. You can quickly see all-time high. So you can use an acronym, all-time high, ATH. You can write all-time high if you want. It's up there. Usually I use green for that. It's just personal bias because the market has to go up to take out that all-time high. And somewhere within here on this chart, now remember, this is the chart that my broker has given me. So you use the chart that your broker gives you. Some have got charts going back hundreds of years, and that's perfectly fine. Then if that's the all-time high and this is the all-time low, what are some of the things that everyone's going to be looking at in this market? Well, they're going to be interested in the middle point of the all-time range. So hold on. I'll tell you what tool I use. I think by now you know. So let's just call that 50% midpoint all-time range. Did I call that an all-time range or all-time high? All-time high, okay. So there's the all-time high, all-time low, there's the midpoint. So I'm using this tool, the Fibonacci retracement, and on that tool, in terms of the Fibonacci properties that I have, I've just got the 0, the 0.5, which is 50%, the 1, which is 100%, the 2, 200, and the 1.5, which is 150. So if I then just anchor from the top, pull it to the bottom, I get my 50% midpoint. Then, of course, you just got to say to yourself, what else can I see that the market might be responding to or has responded to in the past. What's significant for me to look at? That lower high, that cluster of lower highs would be important. I try not to have too many markings on my chart. I think if we kind of talking and working on something together, you hear me say, hey, because so many things on your charts. What happened to it? George, I think I probably went and see, I changed the visualization to 5 minutes because that's what I'm trading. So sorry about that. So this is the high of August 2022. So we just mark it. I mean, that's, you can kind of see that's where we're at. And once the month closes and we're above that, once August 2022, if this month closes and we're above that, then just take it off and that becomes a key level or that becomes a key level. You could mark this beginning of the bear breakout, which was a high of April 22. Then you got your midpoint here, but you've also got, so it's a bit of a cluster of levels of support. This is the low of October 2022. And that's about it, on this market. Of course, you'll have, let me say, of course, put a moving average in exponential 10 EMA. You can use any color that you want. And there is your 10 EMA, which we use to indicate strength of a trend. So as long as market is above that, is strong, below that is strong and starting to go up. Then the other thing that you then do is just go down to the daily. Now, question I was asked is, why don't I look at the weekly? There's absolutely nothing wrong with looking at the weekly. I just don't want a lot of lines on my chart. I only tend to look at the weekly when I get, if I'm trading on a Friday, for example, because the market always wants to control the close of a particular week. Otherwise, there's no point going to put in levels of support, etc., from the weekly, and then just go down to the daily. And again, on the daily, just have a look at it and say, is there anything distinct that you ought to be marking? So we've got that key level that's marked. We've got a bit of a cluster here. We broke out above it. We've got the bulls going up. Oh, we've got this low here. That's a pretty interesting low. Okay, so that's 4th of May. Low 4th May plus its higher low in May. Okay, because that's where the market tend. Now, if we ever come down here and you see that, say, oh, okay, so maybe that's what's been tested. I mean, this high here on your lower time frame, you have the high of yesterday marked on it. But for now, we can just say high of 23 May. May. That doesn't look like May. I wouldn't worry about marking everything else that's down here. You're just gonna have too many things that you have. If we get past this level, then that's a key level. Now I'll talk about why we're not gonna bother marking that high, but for now, this is the low of April 23. Okay, I'm not going to bother marking the high of April because we've already gone past it. And all of these were efforts to test it, to see the strength and the resolution of the bulls after breaking out above it. So there's no point, marking the high of May. It's just going to clutter your charts. Then probably, you could mark that. That's a key high low. I'll label them shortly. And then you got that, which is the low of January 23. Now, this is very interesting. It's low of Jan 23 plus low of 2023 so far. So that is a key level. This is the low of 19 January. It's a key higher low because the bulls accelerated up from it. What did we say? This is low of 19 Jan. Low 19 January plus key higher low in Jan. So obviously, you can see I'm not wasting time narrating stuff. Finally, low March. Yeah. Okay, so that's about all that you want to mark on this chart. And then you just say to yourself, is there anything else distinct that has taken place? Well, we had bull acceleration, we had this sell-off, higher low double bottom, and we broke out above that. And you probably have wondered, well, that little pattern, where is the measured move of it? So at its most extreme, the measured move of this pattern, this double top and this low acceleration up, the bulls want to get up there. That's a primary objective. If you look at an earlier target for the bulls, we had this lower high double top here, and it was tested, went sideways, then we broke above it. So the bulls have kind of got to the early target. Of course, being a bull, you want the higher target. So I always start with the earliest target. So even if you were down here before all of this happened, you'd be saying, well, if the market broke out above here, where is the goal? And the goal will be somewhere there. And that's why, the market is going sideways. And, even if you take a trade here and you're waiting for the measured move, if you can sit through the pullback, that's perfectly fine, because the market may still make a pullback. So you look for measured moves, you look for leg one, leg twos, and those kind of patterns. That's the thing that you look for. Then if there's nothing distinct that you are seeing, that's it. Then you just go down to the actual day that you are trading. Here's an interesting one. So the month of April was a trading range month. And you probably have been wondering, well, if we do break out above this, what's the objective for the bulls? So there is the earliest objective. We go to that measured move. If we looked at that low, we go to the measured move. The other side of it, if the bears had sold off quite aggressively, you'd have been saying, okay, the bears are strong. So if we didn't have this, if these bears had carried on selling, the objective would have been to get down here. So you can see the reason we put these measured moves is if you take any trade and you kind of hoping to get there, so you buy here and you get a deep pullback. What do? You can exit if you want, or you can hold on to your whole thesis and say, looking at what the market is showing me, there's still a measured move for me to go to. So I'm going to sit through all of this pullback until I get there. All right. So thank you very much. I don't know, someone posted something there. Adeline Chua, yes, there will be a recording. Marlon will post the recording. If you look at all we've got a live trading profits. If you go to actions to wealth and type in live trading profits, you will get the link to all the pre-recorded messages. Unfortunately, I wasn't prepared or fast enough, but Malo may be able to assist if you drop him a message, or just go to actions to wealth, live trading profits. All right, or we'll catch up. I saw some of the guys are sitting in Wednesday, the market. So I'm going to leave this chart on. We can look at it a little bit further. All right, guys, take care, and we shall see you again. Bye-bye.